Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching markets with Santo and CJ. And of course, we have a lot to digest, a lot of earnings, a lot of news flow in the global markets as well. But before that, we have to put the automobile sector in the limelight today. If you look at the automobile sector, it came out with its October sales data yesterday, and of course, today also some of the companies will be reporting their numbers for the month of October. Now, the month of October was very crucial, largely because this was the peak festive period and everybody had very high expectations from the sector. But my reading so far, Santo, of the data seems to show that maybe instead of the momentum going higher and probably accelerating, it seems like we are seeing a little bit of a slowdown in momentum as far as the growth rates are concerned, not in terms of degrowth, but as far as the growth rates are concerned. If you look at the October sales data, one thing of course is sure that where market was expecting that the chip shortage was easing, and it is easing in some companies for some players, but overall, if you look at a sector view, clearly it is still creating a lot of damage as far as production shortages are concerned for a lot of players. I mean, you had Maruti, when their Q2 earnings came out, they indicated they could not produce 35,000 units because of the unavailability of semiconductors. So that is clearly still plaguing the sector, and one hopes that it will decrease going ahead. But so far, if you look at the commentary that is coming out from the semiconductor industry, it doesn't look like they're in the mood to enhance capacities at this point of time. Apart from that, worryingly for me, segment leaders, I mean, if you talk about cars, you talk about Maruti Suzuki. If you talk about two-wheelers, you talk about Hero MotoCorp, Santo. And both of them failed to beat analyst expectations for the month of October in terms of sales data. Export sector, of course, has been a weak link as far as two-wheelers are concerned. You look at Bajaj Auto, you look at Hero MotoCorp, even Maruti Suzuki for that matter of fact, they were facing slowdown as far as export sector is concerned, and that is largely due to the fact that currency headwinds, the dollar strength has made a lot of weaker economies or developing economies suffer at this point of time, and therefore demand there is struggling, and that will continue to struggle, and therefore the outlook on the export sector for me seems quite bad. And lastly, Santo, the entry-level two-wheeler market and the passenger vehicle markets. This is the mass market where bulk of sales come for a company like Maruti Suzuki or a Hero MotoCorp or even Bajaj Auto. Now there, clearly the festive demand has not really done much to lift sentiment. If you look at it on a year-on-year basis, it still seems that the weakness there is likely to continue, and because of that, because companies would be forced to give more discounts to entice customers to come back to dealer shops, that could in the future hit margins for me.
Well, if you go to what R.C. Bhargava, the Maruti chairman, was saying just a couple of days back, his view is that this year passenger vehicle sales will make a new record high. They will surpass the numbers that were last seen in 2018-19. That said, CJ, there's also a slight structural demand shift that you're seeing in the auto sector. In fact, demand for the entry-level vehicles is going down. Yeah. That's what Mr. Bhargava was saying, and that for SUVs now is on the uptick.
Yeah, it's the so-called K-shaped recovery. I think that's what we are
definitely
seeing.
So there is, and let's not forget, this was a year, in fact the last 2 years, where the auto industry has been hit by multiple headwinds. You've got high costs of maintenance because of high fuel prices, insurance costs have gone up, so that again makes the cost of owning
the implementation of BS6 as well, that also
exactly. High raw materials prices, which meant that auto companies hiked prices, so that was again another headwind. Then you had the chip shortages as well, supply chain. So all of these things coming together is one reason why you're seeing the auto sector under so much stress during this year. That said, it's still making a decent recovery. You're seeing good demand. If you look at the October sales, at least for passenger vehicles, momentum may have slowed down a bit, but at the same time the numbers are pretty robust. You're seeing an upswing in the commercial vehicle segment as well. So I don't think, CJ, there's room to be bearish on the auto sector, and definitely in the coming days, probably with some easing of crude oil prices and also easing of the chip shortage and also raw material prices, they've already started coming off a bit. So I think, yes, market may have moved a little ahead at this point in time. The auto stocks have had a good run so far, barring an exception here and there. Now, maybe you could see the stock price now trying to catch up with valuations for a while.
Absolutely, Santo. My argument is not that you should turn bearish on the sector. I don't think that is something that you can afford, given the fact that a lot of the market participants believe that we have had the worst now behind, and therefore a new cycle has started for the automobile sector. But I just feel that maybe the optimism that we are seeing, or maybe overt optimism that we are seeing on the street, may not be justified just yet. And if you talk about challenges, Santo, yes, maybe chip shortages are easing, probably, maybe fuel prices are going down. We don't know yet, we have not seen it in the pump prices yet, but there is hope that it will go down eventually. But it does not mean that new challenges are not cropping up. If you look at it in terms of new challenges, GDP growth is slowing down in India. No matter how much, on absolute terms, in terms of growth rate, India might be outperforming the world. It is a fact that our growth rate is also slowing down along with the rest of the world. And you talk about Maruti itself warned that if GDP growth slows down, that is directly proportional or proportionally linked to the slowdown in car sales as well, because they tend to move in tandem. So that is one risk. The second risk is the cost of financing a vehicle purchase at this point of time is also going up. That is probably one of the reasons why you're not seeing a bump up in demand in the mass market, because there generally purchases tend to be financed. You don't tend to pay a higher down payment as maybe say a upper middle class or a higher class individual could be able to pay for an SUV. So clearly higher interest costs, GDP growth slowing down. I think therefore the mass consuming market will remain under pressure going ahead, and 2023 could be the year of consolidation instead of another big year of gains for automobile stocks, in my point of view.
CJ, what's happened to you? Where's your sunny optimism
in the face of everything gone? It's about the facts. I mean, automobiles, yeah, they were a good tactical bet given that valuations were so depressed, the entire sector was so depressed. But I think we have had a good bread so far. I think the bread was quite tasty so far. But going ahead, I think we will need to see whether we will be able to have another loaf or not. That is the entire point.
Well, the proof of the pudding
is in the pie. Well, that's it. Let's move on and look at the setup for the trade today. Before I do that, of course, guys, if you have any questions, any comments, any thoughts, please utilize the comment section and also use the hashtag AskMC to put your queries in. Before the bell, well, the trade setup today looks a little muted. We are looking for a very moderate day. If you look at the exchange Nifty futures, it's indicating a downtick for the Nifty, down about 20 to 25 points at this point of time. Of course, the cues from Wall Street also were quite negative. If you look at the benchmark indices there, they fell about in the territory of about 1% downtick, largely on the back of a very strong job openings data that came out in the US, which is basically indicating that the Fed has been right so far. The job market is just so resilient that it can bear higher interest rates. I mean, we have seen almost 250 basis points of rate hike from the Fed, and the job market is not showing any signs of slowdown yet in the US, and I think that added to the confidence that the Fed will continue to raise rates, and therefore you saw stocks declining. US bond yields, however, were flat, but if the bulls in India did need some confidence, I think they needed to only check the Twitter account of Peter Brand, who is of course, one of the godfathers of technical analysis and a legendary figure in that segment. And he said that India could actually be the leader of the next bull trend in the global equity market, because there has been a breakout in the Nifty, according to him, backed by a massive jump in volume. So clearly, he's seeing a very strong uptrend, beyond the 18,000 for 460, 500 level, which is our record high, from which we are only 2% away, Santo, at this point of time.
Well, CJ, despite the market doing so well over the last few days, I would not say that the mood in the market on the street right now is still euphoric, the kind of upbeat mood that you had seen earlier, and good reason there. You had the market reversing after coming close to 18,200 quite a few times. So this time clearly there seems to be more of caution than euphoria. That said, bulls are waiting for a convincing close above 18,200 before they really double up on their positions. And a quick look at F&O data, we are seeing build-up of short positions in futures of Axis Bank, Ashok Leyland, Escorts and M&M Financial. And CJ, you were mentioning Whirlpool yesterday. I just noticed that the PCR, the put-call ratio, and that has gone up to 2.3. Now,
wow.
A put-call ratio, which means that a lot of people are buying puts.
Exactly.
And typically when a lot of people buy puts,
but that also means that a lot of people are actually writing puts as
well.
Exactly.
Yeah. You always try to look at it from the put writer's perspective, because they are deemed to be the smart money
Yes,
in the
they
market.
have the deeper pockets and of course more information, and that is one of the
Exactly.
reasons why they are
So
taking
whenever
that
the
risk.
put call ratio crosses 1, if it's it means that a lot of people are buying puts, but at the same time it also means that the stock is less likely to go down.
Well, thank you, Santo. You saved my day.
Let's move on to the newsmakers
Yes, of course,
segment.
the newsmakers of the day, and today on my radar would be Nykaa. Of course, yesterday the company's numbers came out and we saw a decent reaction from the stock as well. But, of course, the management held a conference call with analysts post market hours, and within the conference call, some interesting nuggets came out, Santo. Of course, the CTO, the new CTO who has been announced by Nykaa, Rajesh Uppalapatti, he spoke during the conference call and he indicated that the company will now look to embrace external technologies such as cryptos, metaverse to enhance consumer engagement, and of course include them or inculcate them in the new platforms that the company might develop going ahead. So that would be something that will intrigue a lot of technocrats and technologists out there. Apart from that, the company indicated that the margin expansion that they have seen in the second quarter is not a one-off. They expect a large chunk of that margin expansion to sustain going ahead in the coming quarters. Falguni Nair, the founder of the company, said that the consumer demand growth that we have seen in the second quarter is most likely to sustain going ahead. They are not seeing any sort of indication that consumer demand growth is slowing down for them. And lastly, they have indicated that the first international store of Nykaa, remember they have recently entered a strategic alliance with Apparel Group to open Nykaa stores in the Gulf countries. So that first store will now come online over the next 12 months, Santo.
Well, CJ, I'm tempted to say a few things, but since we have agreed that this is the segment where we won't be at each
but
other's
you can always give your two pennies, Santo. I'm sure our viewers would always want to know your
two pennies. These
Two
are all
pence?
very nice, fancy words. Crypto, metaverse, and all these things. But will they make any material difference? I'm not sure at this point. Well, Tech Mahindra, that was the big earnings that came. That was announced post market hours yesterday. Now the numbers were broadly in line with expectations. On the margin front, although the company missed analyst estimates, and what some of the analysts have pointed out is that while the company has said that the margins for the second quarter would be better than those for the first half, for the second half of the year would be better than those for the first half, the company has still remained non-committal on its earlier margin guidance of 14% for FY23. And according to CLSA, the valuations are still reasonable at this point in time, although the second quarter numbers clearly lacks any triggers.
Well, Santo, what is your hot brokerage bet of the day?
Well, HDFC Securities has initiated coverage on Satluj Jal Vidyut Nigam. Now, I recall this IPO, it had come way back in 2009 and investors were still holding on to it. Must be really a bitter lot. The stock has just not performed, but probably now things might be changing for the company. And according to HDFC Securities, there is a huge untapped potential for hydroelectric power in India, and against the potential capacity of about 150 gigawatts, the installed capacity right now is just about 46 gigawatts. And the big play here is that the government has committed to about 500 gigawatts of power from renewable sources. So that being the case, clearly there will be a lot of focus on hydroelectric power as well. And among the triggers that HDFC Securities sees for Satluj Jal Vidyut Nigam as capacity addition, regulated business model, and consistent operational performance and reasonable valuations.
Well, Santo, I think if you read Morgan Stanley's report, India, why this decade would be India's bull decade, I think clearly power sector will emerge as one of the favorite bets according to Morgan Stanley, and I'm not so surprised that SJVN has got such an outlook. That said, the market has opened, and yes, as indicated, it has been a very flattish start for the Nifty. The Nifty and Sensex about near the flat line, but thankfully in the positive territory. And if you look at the Nifty,
well, there it has slipped into the negative.
Yeah, now
CJ.
we have slipped into the negative territory. The Nifty mid cap is still holding in the green territories for now, so we will have to wait and see whether that sustains or not. And the Nifty bank also is continuing to outperform the Nifty, but around the flat line at this point of time.
Well, buyers are still heading for second line stocks. You're seeing good strength in mid cap and small cap at this point in time. So 1241 stocks are up on the NSE compared to 450 stocks which are down at this point in time. ONGC is up close to 1%. Tata Motors is up close to 0.5% and Tech Mahindra is flattish. The market not really impressed by its second quarter performance.
Yeah, Santo, if you look at, I think some of the sectoral indices at this point of time, largely most of them are doing quite decently. The auto pack is holding up at this point of time. The Nifty Auto Index, if we can get the chart, it's around the flat line. So clearly some stocks are doing well, some are not really doing well at this point of time. Well, coming back to my top brokerage bet, Santo, for the day, this is Naveen Fluorine. Of course, generally I have given positive point of view on Naveen Fluorine from the market, but today I thought maybe we should get the other side of the story as well. And brokerage from ICICI Securities came out with a report on the stock after the company's analyst day meeting on October 31st, and they have now retained their reduced rating on the stock and a target price of in the range of about 4,000 rupees. They believe the reason why they have kept a reduced rating or an underweight rating is because the valuations at this point of time are a little uncomfortable to justify any sort of an upgrade as far as ICICI Securities is concerned. The brokerage, however, still remains quite optimistic about the the prospects or growth prospects for the company. They believe that the company has created a good niche for itself within the specialty chemical space, and that niche will continue to drive margins as well as growth rate higher. Apart from that, they believe that a specialty chemical is definitely the most lucrative business that Naveen Fluorine has at this point of time. That is where the massive amount of growth will come, and that is largely because it is currently providing services or products or delivering products to Santo, three major agrochemical companies around the world. And I think that is why ICICI Securities remain quite bullish on the earnings front, but they feel that the entry point that the stock is providing at this point of time may not be, may not result in good returns. So therefore, they are waiting for a good entry point on the stock, and therefore they remain reduced. They have retained their reduced rating or underweight rating on the stock at this point of time.
And with that, let's move on to the stocks on a watch list this morning, starting off with Adani Ports. Healthy set of numbers for the second quarter, and the sequential growth has been fairly robust. The highlights of the earnings were the strong performance of its logistics business, where revenue was up by about 30% and EBITDA was up by close to about 59% year on year. And according to Nomura, the other catalyst for the company is the likely sale of its SEZ land, and it's also said that the exit from the Myanmar project by the end of FY23 could also be added relief.
Well, Santo, numbers of course were quite strong for Adani Ports, but for me the outlook going ahead remains a little hazy, largely from a macro point of view, given that global growth is slowing down, and given that if you look at the export-import number for Adani Ports in the second quarter, that was a little concerning according to a lot of brokerages, and they believe that that is largely down to the fact that global growth or global trade in itself is slowing down, and that could be a little bit of an overhang on the stock going ahead. I mean, if you look at the script within the entire Adani Group pack, I think it has been among the underperformers within that within that pack, and that probably goes to show that market remains a little skeptical as far as the sustainability of the volume growth numbers that Adani Port has been registering over the past 1.5 to 2 years now. So for me, the stock remains decent. It has been holding its own within the Nifty pack. But going ahead, the outlook looks a little hazy from here on.
Just a couple of points, CJ. One is that the company so far has stood by its volume guidance for this year. That's one. The second point is that among all Adani Group stocks, Adani Ports is one where you have higher proportion of institutional interest. So that is also something you can't ignore.
Absolutely. Well, the first and last pick, of course, of the day for me is Sun Pharmaceuticals. The company came out with very surprisingly strong earnings. If you look at the numbers, generally you are getting a feeling from Sun Pharma now that they are now entering a very strong earnings momentum phase in their history. The Q2 earnings were largely above street estimate almost on all fronts. This is despite the fact that they took almost a 240 crore loss, Santo, because of forex movements during the quarter. So that goes to show the sort of strength the base business or the underlying business has at this point of time, and a lot of this has been driven by the US specialty drug business. That business continued to show very strong revenue growth at this point of time. Clearly, prescription sales are rising for Sun Pharma in the US, and that is a very, very good trend. Apart from that, Nomura suggested that the strong margin performance that we have seen in the second quarter gives a lot of confidence in terms of earning visibility for the coming quarters as well. So this is one stock, it is edging towards its record high, Santo, which it had hit almost 7 years ago for about 1200, 1250 rupees. It is now in the territory of 1000 rupees, and investors who had probably bought the stock 7 years ago and held on in the hope that probably they will get to exit, in the black. I think probably those hopes may be realized very soon.
Well, yes, the stock has been underperforming for the last almost 7 years, but since pandemic it has given some pretty decent return. It's almost become a 4-bagger. That said, hard to argue against the numbers at this point in time. Clearly the growth, the momentum in the US specialty business is one of the big positives at this point in time, and the company now seems to have put most of its issues behind and clearly seems set for the next phase of growth. Yes, and that point, CJ, about investors having bought in earlier, clearly, but we also tend to think that investors bought at that peak price, not all of them. So if there is someone,
nearer to the peak, of course we are talking about 200 points gap from here on, or 200 rupees gap from here on. If you bought anywhere between that point, clearly you have had, you have been in the red almost for 6-7 years now, and you are only now breaking even.
Well, probably they would have even averaged their holdings,
possibly,
because the stock had gone all the way down to about 350 levels. Well, Cholamandalam investment, yes, that's the next stock on my watch list. Again, decent set of second quarter numbers there, although the profit growth was slightly muted. That was due to higher operating expenses and also higher cost of funds. But on the positive side, disbursements were pretty healthy. CJ, close to about close to 70% growth in loan disbursement. That's a big jump. And the heartening part is that earlier bulk of the portfolio was largely vehicle finance loans, but now it's fairly diversified, and vehicle finance at this point in time accounts for just about 60% or 55 to 60%, and it's the newer areas that the company has ventured into, such as loan against property, home loans, loans for small businesses, personal loans, business loans. These now account for the remaining 35%, 35 to 45%. So clearly the diversification strategy which the company has been following, that is now beginning to work for it.
Yes, Santo, if you look at the loan growth number, clearly it seems like a very, very spectacular quarter from Cholamandalam, even though the overall earnings report that came out, or numbers that came out, were largely in line with the market's estimate. But the concerning bit for me will remain the margins going ahead. I feel that because of being an NBFC, because of being a non-deposit taking NBFC, I think the cost of borrowing for the company will continue to rise. We have already seen that borrowing costs are rising for a lot of Indian corporates, especially in the Indian corporate bond market, and interest rates are not coming down anytime soon. So therefore, the cost of borrowing is going to remain high. If you look at the second quarter itself, the cost of borrowing jumped almost 70 basis points on a quarter-on-quarter basis for Cholamandalam, and did dent the NIMs for the quarter. NIMs almost fell about 45 basis points on a year-on-year basis for Cholamandalam. So I think while loan growth may remain strong because of high demand out there, I think it will probably come at the cost of lower margins going ahead, Santo.
Well, Voltas, the last stock on our watch list, disappointing set of second quarter numbers, sequential growth, degrowth in top line as well as bottom line. Now it appears that the company is trying to regain market share at the cost of margins. Remember, margins was the biggest concern for investors ever since the first quarter earnings. Since then the stock has been steadily going downhill. Rather, it's been stuck in a range. It had hit a high of around 1300, and since then it went down all the way to about 850 levels. But if you just look purely going by the price action, CJ, the market certainly doesn't seem to be upbeat on the prospects of Voltas, and the second quarter numbers clearly give reasons for that.
Yeah, absolutely. But also there is a caveat in the second quarter numbers. Of course, the company did report a loss of about 6 crores in the second quarter, but I think it was also because they had to take a one-time provision of about 100 crores during the quarter. So if you adjust for that, the performance does not look that bad on a year-on-year basis. Apart from that, I think Voltas is just going through, just like Whirlpool, Santo had mentioned yesterday, I think Voltas is also going through a very rough patch in terms of earnings because of higher material costs. There's a heated competition in the market that it currently is present in, and I think because of that, probably near-term outlook on the stock may remain quite cautious, but the long-term structural growth story still remains intact. We are still an underpenetrated market as far as AC ownership goes. So given that context, I think valuation may soften in the near term, but you could see a re-rating the moment you see revival in margins as well as demand for Voltas in the coming years?
Well, just one point on that, CJ, about that one-off provisions of 100 crores, but that still doesn't account for the margins. Margins are calculated before that. So that is still below 5%. That's almost, it's in fact the lowest in more than 13 quarters.
Absolutely, absolutely. That's it, Santo. We should take some of our viewer queries that have been coming, and thank you so much, guys, for posting so many queries. This is an interesting one, Santo. Deep Khanderia, he wants to know the best EV two-wheeler stock in the listed space. I mean, a lot of the good ones are actually not in the listed space, but within the listed space, I think the one that comes to mind probably at this point of time, or the one that market is very enthusiastic about, seems to be TVS Motor.
Yes.
I think TVS Motors EV play at this point of time, or the two-wheeler play at this point of time, is much ahead of many of its competitors and rivals such as Hero MotoCorp. Bajaj Auto are clearly trying to catch up. Hero MotoCorp actually could be, the dark horse here, because although it has come in late in the segment, Hero MotoCorp actually has been doing quite well as far as its electric scooters are concerned. We are seeing month-on-month growth in volumes for Hero MotoCorp, and it has quickly jumped to almost the third position, if I'm not wrong, third or fourth position, if I'm not wrong, just behind Ola Electric as well as Ampere from Crompton Greaves. Also, Crompton Greaves, I mean, that reminds me, Crompton Greaves also is a very, very strong bet on the two-wheeler market, because they have a good, stake in Ampere, the two-wheeler that they are selling, and that has also been doing quite well so far. So clearly, these are some of the stocks that you can probably look at. Of course, do your own research, do your own market research, your own analysis, and of course, then consider whatever you have to do in terms of investment decisions. Santo, another interesting question coming in from Rajiv Kumar. He wants our thoughts on DMart as well as IRCTC.
Well, DMart, very clearly, the good thing I would say with DMart is that despite being in a very fiercely competitive space, the company has managed to hold its own. It's been steadily growing both its top line and also holding on to its margins. It is trying quite a few things. So, for instance, it's trying to get into the food space in a big way. There's also market chatter, which is not confirmed at this point in time, that it has got some plans for its e-commerce foray also.
Well, yeah.
So, there are quite a few things happening, but if you just look at it from the conventional prism of P multiple, the stock does look pretty expensive, but then certain stocks have remained expensive for long periods and very unlikely. It's, I would say, something like the real estate in Bombay. They never seem to get cheaper, no matter what.
Never cheaper.
So
absolutely,
that may not be the best. But then again, you'll have to see whether at such high valuations will you then make huge profits from that. If you are to buy at very high valuation, then it becomes a very long drawn game. That's how I would see it.
And as far as IRCTC is concerned, Rajiv, I think if you look at that stock, it's been treated as a platform stock ever since its listing. I mean, that was one of the reasons why the stock almost rose almost fivefold to the high of 2100 last year, and since then has almost seen a 50 to 60% correction. So IRCTC has been treated as a platform, internet platform stock, and therefore I think its valuations will also move in tandem with what is happening with internet platform stocks all across the world. Now, if we look at the business fundamentals, I think the case is becoming stronger and stronger for IRCTCs, largely because airfares at this point of time are not, palatable at all, and you could see a lot of demand substitution happening when people may forego air travel in favor of railway travel. So there could be a demand substitution happening in favor of IRCTC. That is one case. Apart from that, generally with the reopening of the economy, you are seeing that demand is coming back for IRCTC. As far as valuations are concerned, watch out for the time when US bond yields peak. Once US bond yields on interest rate peak, I think that is where you will start seeing tech valuations going upwards once more, and that could be an interesting point to look at IRCTC once more.
Well, our producer has just told us to wrap the show, and so we'll be doing exactly that. Well, it's a wrap on this edition of Markets with Santo and CJ. Once again, thanks for watching and also sending in those queries. Continue to do so, and we'll try to address as many questions as possible.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you live again at 3 p.m. Till then, have a great day.